Hi everyone, welcome back to Saheb Academy. Today in this sixth video of cash flow statement chapter, we are going to solve our fifth problem, and this question is from the ICAI study material, as you can see over here, illustration 12. Now this is a very important question because here we have got a hidden adjustment of drawings. Alright, so let's analyze this question and let's understand how to do this. Now see here, from the following information of Mr. Zen, prepare a cash flow statement as per AS3 for the year ended 31st March 2021. So here we have been given the ledger balances of Mr. Ben, as you can see over here, of 2020 and 2021. Previous year, current year, opening balance, closing balance. You all know that, right? So first we have Zen's capital account. Okay, capital account balance is given 10 lakh opening balance and closing balance is 12 lakh 24. How is it has increased? You will say it's really simple, sir. We all know final accounts and all. Capital increases because he might have introduced more capital in the current year, or maybe we have earned profit. Yeah, this Mr. Zen has earned profit and profit gets added with the capital account. We all know that. Yes, and then you also know capital account can reduce also if the owner withdraws the money, but here it is increasing. Let's just see. We'll prepare the ledger account, we will star mark it, and we'll see what all adjustments are there regarding that. Is it clear? Okay, simple, don't worry. Next we have trade payables, which is a current liability. You all know current liabilities and current asset, we consider them in working capital changes in the indirect method, yeah, in the operating activity, isn't it? Yes. So what is happening to this trade payables? 3 lakh 20 opening balance, closing balance is 3 lakh 52. So it has increased by 32,000, right? If current liability increases, that means positive impact on cash. So we will add it in operating activity while doing working capital changes. Fine. Next we have Mrs. Zen's loan. Okay, this Mr. Zen has taken a loan from his wife. But now let's just see what has happened. See, Mr. Zen's loan was there. See here, in opening balance, we have 2 lakh. Okay, then closing balance is 0. So what has happened? Just think. There was a loan of 2 lakh in the beginning of the year. In the closing, there is no loan. So that means, of course, he has repaid the money. Yeah, he has repaid the loan. Isn't it? Mr. Zen has repaid the loan. So that's nothing but loan repaid, which is, deducted in financing activity. Why? Because we are making the repayment. Isn't it? Borrowing has been repaid. So we have to subtract it in financing activity. Same like redemption of debentures, loan repayment. Yeah, that's what it is. Next, we have loan from bank. Okay, loan from bank also is there. All right. From 3 lakh 20 opening balance, it has become 4 lakh. It has increased. Why this loan from bank has increased? Because we have borrowed more. This Mr. Zen has borrowed more. How much more he has borrowed? 80,000. From 320, he has gone to 4 lakh. So 80,000 extra he has borrowed in this current year. So that means he has got the money now, and it's a financing activity, borrowing, right? So it will be added in financing activity. Is it clear? Simple. Next we have land. Land is what? Land is related with investing activity, isn't it? Yes. So what is happening to this land? Opening balance is 6 lakh, closing balance is 8 lakh 80. It is increasing. It's increasing by how much? It is increasing by 2 lakh 80,000, right? 6 to 880. So land is purchased. That's what it means. Yeah. If it is increasing, that means you have purchased more land, isn't it? Yes. So that you will subtract in investing activity because that's an outflow of money, isn't it? Yes. Understood. Next we have plant and machinery, and in the bracket they are saying net block. What do you mean by net block? Net block means just WDV. Okay. Gross block minus all accumulated depreciation. That's what net block is. Okay. So you have WDV of plant and machinery, not the original cost. Okay, fine. They are saying 6 lakh 40 opening balance and the closing balance is 4 lakh 40. So it is decreasing. Why is it decreasing? We don't know. We have to check the adjustment. Maybe we have sold the machinery. Okay, and depreciation is always there. So that is also there. Okay. Yeah, so we have to prepare the ledger account of plant and machinery. Almost in every question we have to do that. Okay. So we'll see. Next we have inventories. Inventories are what? Current asset. Working capital changes, you have to see that. So what is happening? From 2 lakh 80 opening balance, it is decreased to 2 lakh. From 280 to 2 lakh, it is decreasing by 80,000. So if current asset is decreasing, that means positive impact on cash. we have to add in operating activity while doing working capital changes. We all know that. Yes. Next we have C, current asset. What is happening to this one? From 240 it is increased to 4 lakh. It has increased by 1,60,000, right? It has increased. If current asset increases, that means negative impact on cash. You have to subtract in operating activities while doing working capital changes. Yeah, in the indirect method. Yes. Last we have C, cash, which is the last two items, opening balance and closing balance. We take that in the cash flow statement at last, right? Yes, that's what it is. Then see, in additional information they are saying a machine costing 80,000, accumulated depreciation is also coming over here. That means the company, I mean this Mr. Zen, he is following which type of accounting treatment for depreciation? Which type? The accumulated depreciation one. Yeah, by opening accumulated depreciation, or we say by opening provision for depreciation account. Okay, that way. So in that way, what do? We open three accounts. One is the asset account, the PPE account, and then the second one is the accumulated depreciation account, or it is also known as provision for depreciation account, and the third is asset disposal account, if we are disposing any asset, if we are selling any asset. Is it clear? Okay, fine, understood. So there is accumulated depreciation also over here. Accumulated depreciation there on 24,000 was sold for 40,000. Okay, understand, 80,000 was the cost of a machinery. On that we have charged how much depreciation? 24,000 depreciation accumulated is there. Okay, and then we have sold it for 40,000. So easily you can find out now, 80,000 minus 24, you will get the WDV of the machine. WDV, compare it with the sale value, 40,000, you will get the profit or loss on sale. Okay, we'll do that in the account, don't worry. Then next they are saying, see, the provision for depreciation on 1st April 2020 was, okay, the provision for depreciation means accumulated depreciation only, duplicate names, okay, was 2 lakh, opening balance was 2 lakh, and 31st March 2021 was 3 lakh 20. So they have given you the opening and closing balance of accumulated depreciation. Okay, that you will take in the ledger account, don't worry. Then they are saying, see, the net profit for the year ended on 31st March 2021 was 3,60,000. So net profit has been given to you. Okay, so now you have to see, you know, how much is the drawings and all. Okay, see, it's really simple. Almost in every question, whenever they say like this proprietorship, you have to understand there will be a drawings head and adjustment. Okay, so what is this drawing head and adjustment? See, it's really simple. First, take the opening capital. Opening capital is 10 lakh. In the current year, Mr. Zen has made a profit of how much? 3,60,000. So profit gets added with the opening capital. So 10 lakh plus 3,60,000, that's equal to how much? That's equal to 13,60,000, right? That's what it should be, the closing balance, isn't it? In the opening, the capital was of 10 lakh. In the current year, Mr. Zen made 3,60,000 profit. So how much should be the closing balance? Closing balance should be 13,60,000. But if you see in the balance sheet here, yeah, in this ledger balance, here you find out the closing balance is 12,24,000. It should be 13,60,000. It should be 13,60,000, but actually right now how much it is? It is 12,24,000. So minus 12,24,000, you will find out how much is the drawings, how much money has been withdrawn by the Mr. Zen. Is it clear? That's what it is. See, minus drawings 1,36,000. Okay, so how do you do this working note? It's really simple. Opening capital you took plus net profit, and then you will take closing capital, whatever that is given in the question, and then whatever the balancing figure comes, that's the drawings the owner has made. Is it clear? Simple and straightforward. Fine, understood. All right, now let's just make a ledger account of this Zen's capital only. Some people may understand by this, or for some people they need a ledger account. So see here, Zen's capital account. Capital account has what? Credit balance, opening balance on the credit side, closing balance on the debit side, and debit means minus, credit means plus. So see here, by balance B by D 10 lakh, right? Okay, and then the closing balance is 12,24,000. It's given in the question. Closing balance you took 12,24,000, right? And then see, they have said there is a net profit of how much? 3,60,000. So because of net profit, what happens? Because of net profit, the capital increases, yeah, in the final accounts of sole proprietorship. So see here, capital has increased by the amount of profit he has made in the current year, net profit, right, by P&L. Is it clear? Simple. So that's 13,60,000 on both the sides. 13,60,000 minus 12,24,000, the balancing figure is what? The money that has been withdrawn. withdrawn by whom? The Zen. Is it clear? So Zen has withdrawn this. Now this will impact the cash flow statement. This will impact the cash flow statement. Why? Understand, capital is related with financing activity. So if it is withdrawn, that means what you have to do, what is happening in the business? In the business, the money is decreasing. Capital is decreasing, that's fine. Money is also decreasing, right? So if money is decreasing, that is what is important for the cash flow statement. So this will be, deducted in financing activity. Is it clear? Simple and straightforward. Okay, next you have what? See, next the important and the confusing thing over here is plant and machinery. We have to understand there is an adjustment of that. Sale of asset is there, yes, and then we have to know how much is the current year depreciation, isn't it? That's what is important. So how are we going to find that out? We will open ledger account. We have star marked. We have star marked plant and machinery. We have star marked accumulated depreciation as well. So you have to understand right now. Here they have just given us WDV, written down value. But understand, whenever we open accumulated depreciation account, whenever we maintain this type of accounting treatment by opening an accumulated depreciation, we keep the plant and machinery at original cost only. So this net block, this WDV, we have to convert to original cost right now. It's really simple. How will you convert? You have to find out gross block. Okay, you have to find out original cost. How will you find out? Simple. Net block is given now 6,40,000. 6,40,000, this is the opening balance of plant and machinery. Add the opening balance of accumulated depreciation also. How much is that? 2 lakh. See, accumulated depreciation on 1st April was 2 lakh and closing balance is 3,20,000. So 6,40,000 plus 2 lakh, opening balance plus opening balance, you will get the original cost of plant and machinery. And then 4,40,000 closing balance of plant and machinery plus closing balance of accumulated depreciation. Is it clear? You will get the gross block of plant and machinery, the closing balance. Fine. See, it's really simple. Let me just show you. Plant and machinery, you all know the rules and everything. Yeah, it will stay original cost. That's why we have to do that. Okay, see, to balance B by D, I got 8,40,000. How did I get 8,40,000? It's 6,40,000 in the question. 6,40,000 plus opening balance of accumulated depreciation as well. That's what I have done. 640 plus 2 lakh. I've got 8,40,000. The same you have to do with the closing balance as well. 4,40,000 closing balance you have in the balance sheet. Yeah, here 4,40,000, and then here you have closing balance of accumulated depreciation, that is 3,20,000. So that also you will take. Okay, so 440 plus 320, that's equal to 760. Is it clear? And then in this question they have said that we have sold an asset costing 80,000. You all know whenever we maintain accumulated depreciation account, we keep this account as at original cost only. So we don't take sale and all over here. Just the purchase will come over here, but the sale will not come over here. What do we do for the sale? For the sale, we use asset disposal account. So we have made a sale, right? So just delete the cost of that sold asset. Plant and machinery has been decreased by the cost of the asset that you have sold, 80,000. Okay, by asset disposal. Fine. Why cost you are taking over here? Because plant and machinery, this ledger is at cost. This account is at cost. Fine. Understood. So this will be cross posted in the asset disposal with that amount, 80,000. Fine. Next, we will open which account? Next, we will open accumulated depreciation, because we have to find out how much is the current year depreciation. Okay, that's the objective. So in accumulated depreciation account, what's the opening balance? Opening balance is 2 lakh, closing balance is 3,20,000, right? So accumulated depreciation, which is a contra asset, or you can think of it as a liability. It's also known as provision for depreciation account. So debit means minus, credit means plus. Opening balance on the credit side, closing balance on the debit side, 2 lakh and 3,20,000. Is it clear? Okay. Then the question has said that the sold asset, of that the accumulated depreciation is how much? 24,000. So whenever we sell asset, what do? In provision for depreciation or accumulated depreciation account, we delete the accumulated depreciation of the asset that we have sold. We delete the accumulated depreciation. So accumulated depreciation needs to be decreased by what amount? By the depreciation till the date of sale, okay, of the sold asset. So that's 24,000. It's given in the question. Okay, is it clear? Complete depreciation, okay, accumulated depreciation, not just the current year depreciation, right? So that's what you have to, it will be given to you. So just, transfer it to asset disposal. Done, understood. Then just balance this account. You will find the balancing figure as the current year depreciation. See here, 320 plus 24, that's 3,44,000. Write it on both the sides. 344 minus 2 lakh, that's equal to 1,44,000, which is the current year depreciation. and this is what, this is a non-cash expense. This will go to P&L in the current year. It has gone to P&L, right? So what we have to do of this, we have to add this in the operating activity, isn't it? In the indirect method, we reverse the non-cash. Yes, that's what this is. Fine, understood. Now we have to open asset disposal. Why do we need asset disposal? Because we have sold the asset, right? So we have to know whether we have made a profit or loss on sale. So that's what we are going to understand over here. The question is not saying us how much profit or loss we have made. So see, it's really simple. Asset disposal is same like asset account. The same rule applies. Okay, same like asset only, right? So see, in plant and machinery, asset disposal was there over here on the credit side. So it will come over here on the debit side. Okay, to plant 80,000 or to machinery, whatever. Yeah, to plant and machinery. And then in accumulated depreciation, asset disposal came on the debit side. You will cross post it over here by accumulated depreciation 24,000. Is it clear? Asset came in at cost 80,000. You took all the depreciation over here. Then what you have to do, you have to take the sale, okay, by bank. Yeah, asset disposal is decreasing because you have sold it how much? For 40,000. The question has told you it has been sold for 40,000. Okay, it has been sold for 40,000. Then you will just balance this account. If the P&L balance comes on the debit, that's profit. If the balance comes over here, that's loss. Remember this, write this down somewhere. Whenever balancing figure comes on the debit, it's profit. Whenever it comes on the credit, it's loss. Okay, so 80,000, right? Here also 80,000. 80,000 minus 40 minus 24, that's equal to 16,000, and that is loss on sale. Is it clear? Okay, so if we have sold the asset for 40,000, that means it will be added in investing activity, because sale of asset is what? Investing activity. We are getting the money, we have to add that. And loss on sale is what? It's a non-operating expense. It has been debited to P&L, so we have to reverse that. Okay, non-operating expense by adding it. Fine, understood. Now let's just see the cash flow statement. Okay, we are done with the working notes. So let me just show you the cash flow statement now. It's really simple, it's not difficult. See here, we start the cash flow statement, Mr. Zen, cash flow statement as per AS3, indirect method for the year ending 31st March 2021. All right. So in this question, what did we have? In this question, we had net profit, right? Now there was no tax, anything. So directly we will assume we are at where net profit before tax and before extraordinary items. Is it clear? That is 3,60,000. Fine. So we start from there, 3,60,000. Is it clear? So now what we have to do according to the format, you all know, right? According to the format, we are over here, net profit before tax. We have to reverse non-cash and non-operating items. Reverse items to be considered in other heads. We will reach at operating profit before working capital changes. Then working capital changes you will do. Cash generated from operation, subtract tax paid, but you don't have tax paid, you don't have extraordinary items and all. So just forget about that. Directly you will get net cash generated or used in operating activities. So let's begin. See here, first reverse non-cash non-operating items. So if we see the ledger accounts, do we have anything of non-cash and non-operating? Yes, we do. See, in Zen's capital we don't have that. In plant and machine also nothing. In accumulated depreciation we have found out how much is the current year depreciation, which has gone to P&L as an indirect expense. It has been debited, subtracted. So we will reverse by adding it in the operating activities, right? So see, depreciation has been added back. How much? 1,44,000. Fine. Then we also have one more thing. See, in the ledger account we will come to know. See, in asset disposal we have loss on sale over here. Loss on sale is debited to P&L, same like depreciation only. It has been deducted, so we'll add and reverse it, right? So see, loss on sale of machinery 16,000 we have added. 3,60,000 plus 1,44,000 plus 16, that's equal to 5,20,000. This will be our operating profit before working capital changes. Now what we do? We do working capital changes. So what we have to do? We have to go in the question, not in the ledger account. We have to find current asset and current liabilities which are of operating nature. So first we have trade payables. We discussed about this. From 320 it has become 352, increased by 32,000. So we add that in operating activities because they are positively related with cash, the current liability. Whenever current liability increases, cash also increases. Okay, so increase in trade payables we have to add. Fine, 32,000, understood. Next, do we have any more current liabilities? No, we have current assets. See, inventory. So what is happening to inventory? Inventory has decreased by how much? From 280 it has decreased to 2 lakh. So that is 80,000 decrease. So 80,000 decrease means we have to add that, because current asset and cash are negatively related. Whenever current asset decreases, cash increases. All right, simple. So decrease in inventory will be added. Fine, we got that. Next we have what? We have current assets here, trade receivables. From 2,40,000 it has increased to 4 lakh. So it has increased by how much? It has increased by 1,60,000. So what we have to do? If trade receivable is increasing, that means cash is decreasing. Okay, so it will be subtracted in operating activity. Increase in trade receivable, 1,60,000. Clear? Simple. Then do we have any more current asset, current liabilities? You will say yes, we have cash. No, we can't consider cash in working capital changes. That's last two items, opening and closing balance. Right now everything is over regarding working capital changes. So we'll just find out cash generated from operations, right? 520 plus 32 plus 80 minus 160, that's equal to 4,72,000. That is cash generated from operations. Okay. Now, what do we do after this? After this, we subtract the tax paid. Yeah. Do we have tax paid in this question? No. So that's nil. And then we get what? Net cash generated from operating activities. Okay. So operating activities is over. That is how much? 4,72,000. Because of operating activity, Mr. Zen has generated how much cash? 4,72,000 cash. Is it clear? Okay. Then we move on to the investing activities. Now, for investing activities, what do we do? Again, we go to the question. If we go to the question, we look from the starting. See here, Zen's capital, trade payable, Mr. Zen's loan. No, it's not related with investing. Loan from bank. No, that's financing thing. Land. Land is what? Tangible fixed asset, right? It's a fixed asset. So that's related with investing activity. What has happened to that? It has increased by how much? It has increased by 2,80,000. That means we have purchased the land. If we purchase the land, that means our money has decreased. We have paid the money. So purchase of land will be subtracted. Purchase of land minus 2,80,000. Fine, understood. Next we have plant and machinery. Okay, for plant and machinery we can't just do directly looking in the question. No, we have to go to the ledger account, because there only we have the clarity properly what we have to do. So in plant and machinery, see, in this account no effect will go in cash flow statement because we have not purchased anything, right? So if you go to accumulated depreciation, here also nothing. Yes, but if we go to asset disposal, we find out we have sold a what? We have sold a machinery for 40,000, isn't it? You just have to look for bank account over here. Okay, wherever you find bank account, that means there is an effect on cash flow statement. Okay, fine. So by bank is there 40,000 money we have got by selling the machinery. So that we have to add in investing activity, isn't it? Yes. So see here, sale of machinery plus 40,000. Is it clear? Simple. And then after this, do we have anything else? See in the question, inventories, trade receivable, cash, nothing else. Everything we have done, right? So that means investing activities only two cash flows. So minus 280 plus 40, that's equal to 2,40,000 negative, right? It's negative. Minus 280 plus 40, that's equal to 2,40,000 negative. So that means because of investing activities, Mr. Zen has used this much cash. How much? 2,40,000 net cash used. That much outflow has happened in net. Okay, fine. So investing is also over. Now let's move on to the financing activities. Now if you see in the financing activities, what has happened? How do we proceed? Again, start from the question from the beginning. Zen's capital account. Is this related with financing? Of course. Capital and borrowing, these things are related with financing. What has happened because of this? Because of this capital thing. See, let's go to the capital account. We have prepared, right? Capital account. See, if we see capital account, what has happened? Here, just one bank posting is there. That means only one effect will go in cash flow statement. All right. Now don't think this is P&L. We have to do something about this also. No, from here only we started. This was the starting point, net profit. Okay, we'll not do anything about this. Yeah. So because of drawings, what happened? Because of drawings, money decreased in the business. So this has to be subtracted in financing activity, drawings. Okay, so see here, drawing has been subtracted, minus 136. And then what happened? Let's just go back to the question. Mrs. Zen's loan. Loans, borrowings are related with financing activity only. It has decreased from 2 lakh to 0. That means we have repaid entire money to his wife. Yeah, Mr. Zen has repaid the loan back to his wife. So that's subtract in financing activity, isn't it? It's an outflow of cash. So see, repayment of Mrs. Zen's loan minus 2 lakh. And then what happened? And then next we have loan from bank. What happened over here? From 320 we went to 4 lakh. It increased by how much? 80,000. So we have borrowed more. We have taken new loan of 80,000, right? So see, loan taken from bank, we have to add. Why add? Because money has been received. We have got the finance. So that's all. Next we have see land, plant and machinery, inventories. Yeah, nothing of financing. That's all. In ledger account also there has been no effect. Yeah, yes. So then we just make a sum. Minus 136 minus 2 lakh plus 80,000, that's equal to 2,56,000 negative. In financing also it is a negative cash flow. So that means because of financing activities, Mr. Zen has used how much cash? 2,56,000. So net cash used in financing activities. And then what you have to do after doing this, you have to make a sum of all the net cash flows. Okay, net cash flow from operating activity, that's 4,72,000 minus 2,40,000 minus 2,56,000, that is equal to 24,000. Okay, operating activity 4,72,000 minus 240 investing minus 256 financing, that is equal to 24,000 negative. So this much cash, 24,000, has been decreased in the business in the current year. Is it clear? Because of all the three activities in net. Okay, that's what is called as net decrease in cash and cash equivalents. Now what do? We take the opening and closing balances of cash and cash equivalents. See, cash we have 80,000 and 56,000. Opening 80, closing 56. Okay, so in the beginning we had 80,000 cash equivalent at the beginning of the period, right? How much decrease happened? Decrease of 24,000 happened. So 80,000 minus 24, that's equal to the closing balance of the cash. This much is remaining at the end, 56,000. That's the interpretation, cash and cash equivalent at the end of the period. Is it clear? Cash flow statement is over. Did you understand this? Really simple. Okay, there is nothing difficult over here. See operating activities, investing activities, right? You want to see the ledger accounts, see the ledger accounts. Okay, only thing that is different over here is what? Just this finding out the gross block. Yeah, we have converted into original cost, the opening and closing balance of plant and machinery, and then asset disposal separately we have taken. This we have done in the first problem also. Okay, just the drawing thing was new, right? So that's also very simple. Just prepare the ledger account, yeah, and you will be good to go. All right, so that's all for this video. I hope you have understood each and everything. If you have doubts, then please ask me in Instagram or just comment down below. And the notes of all this will be available on Telegram channel Saheb Academy 7. Okay, so that's it. See you in the next video. Bye.